All right, so this is a tech dev who's talking about this idea of Bitcoin is breaking out against liquidity, or rather M2 money supply, and that those are the breakouts that correlate with large rises, blow off tops in Bitcoin. And there was this claim that the blow off top that we had, or the not blow off top that happened in 2021, 2022, is because there was no break against M2 money supply, and that now we're actually getting that. The reason I find this interesting is that I've been, I've been going over. I've essentially only been trading liquidity for.
Tom, can you pull that back up? Let's pull the
Sure.
most recent ratio, because that was from June 1st, and it looks like he did a ratio in the charts. I just want to pull up that same set of symbols. So he had. Sorry, let me get this a little larger.
Sure.
So this was the. Why is he doing BLX? Oh, liquidity index. Okay, gotcha. So he's doing the BLX as a ratio to the WM1NS. WM1NS, which is the M1 money stock in the United States, not the global liquidity.
Not global liquidity. Yeah.
Right. So interestingly, he posted this on June 1st. And since then, that ratio has risen even more, which is interesting to see.
Yeah.
Okay, that's where I wanted to get. I wanted to see if the data was still holding up.
So I remember in that no blow off top that happened, I was very upset, and I lost a bunch of money, and I wasn't sure why that was. I didn't know anything about liquidity, anything at all, and so that's why I built out my indicator set here. Do I have it on hand? Yeah. So these signals over here are what I've been following, and there's different ways of measuring the health of liquidity within a system, and I'm very excited that more and more people now are paying attention to it, because understanding that Bitcoin is a product of liquidity. It's not a product of the halvings. In fact, I have seen no evidence that the halvings for Bitcoin are anything more than a coincidence. That they have absolutely nothing to do with the price movements, because there's a plenty of other cryptocurrencies that have no that are inflationary, that have no halvings or anything like that, that are correlated with Bitcoin, and all of these things move up together. And so either it's because they're all correlated with Bitcoin, or they're correlated with liquidity, global dollar liquidity, and that's what's making these assets go up. And then when you see that the correlation between these assets are also the same as with the Nasdaq and other sorts of indexes that are sensitive to liquidity, then you go, okay, well then that has nothing to do with the fundamentals of the asset. That has like nothing to do with it whatsoever. And just trading liquidity is like trading seasons. Okay, in the winter you're not going to get any crops growing. Like there's no point in fighting against it. It doesn't matter what anyone says, it's not going to. And in the summer it's going to be hot, and it's going to be rain. Like this, you can bet on that. So as long as you know that those seasons are there, well then you can write that without having to worry about like I'm not really worried right now about a 50% drop in Bitcoin, because we're not in the season of that. We're in the season of 20% drops in Bitcoin, not 50% drops in Bitcoin, which is why I'm perfectly fine with doing 50x leverage on my trades, because I go, well, unless Taiwan's going to get invaded, I'm not really worried about the Bitcoin suddenly dropping precipitously. And that more and more people now are talking about liquidity makes me feel very excited, because I think once that terminology gets into like how retail traders actually think, one, because it's easier to follow, and two, they have these assets they can trade. I think we get GameStop level stuff, Nvidia level stuff in liquidity assets like
Right.
Nasdaq or Bitcoin, and we can get a blow off top this time that's unlike anything that people are actually predicting. So people are talking about
Awesome.
$150,000 Bitcoin, whatever. I mean, I wouldn't be surprised to see 300,000 and higher on Bitcoin this year. Absolutely.
Okay, I'll support it. I think for a while now, several weeks, I've been saying we likely need some kind of a healthy retrace first. There is obviously a long-term uptrend to the crypto market, and I think there's a few points of analysis I think I can add to this. So one of them is, let's kind of take a look at the current global liquidity that we know is highly correlated with Bitcoin. So this is the M2 Global Liquidity Index I wrote, which basically just combines all the top countries into one index, and we can see that over time there's this pretty clear relationship between Bitcoin's price. If this is global liquidity contracting in this zone right here, right here, that lines up with Bitcoin's contraction. And then obviously as global liquidity increases, we start to see this momentous rally up to the upside, and the state we're in right now. But from a technical perspective, I think there's a few things that worry me. Right now, there is technically a downtrend. We have not posted higher highs. In fact, at this particular point, we're potentially printing a fourth lower high and a trend that could start a retrace from here.
Right.
And I'm also noticing that we're seeing a little bit of a contraction in overall global liquidity over the last, what is this period? 70 days. So that contraction in liquidity obviously has me a little bit concerned, because we would hope to see a continued rise in liquidity in order for price to start to elevate. What you can see here is the last retrace we had within this range. We started to see that level tested again. It rejected. We retraced about 20%, to your point, Tom. And in that time, global liquidity was contracting until we found a base and then started to build back up again. I think that's likely what we're about to see again. Even if we were to count, like, what's this Elliott wave move from here to here to the top, I would say, even if we retrace down to the 50 to 52 zone, we get pretty close to about a 0.5 fib retracement, which I think would be a pretty healthy retrace before we're ready to move to the upside again. So I'm still fairly convinced that we might be retracing before we head to the upside again. But I definitely think that the larger move could be very, very big, especially if liquidity grows.
Right. Well, that contraction that you're seeing there, doesn't that look like more like a consolidation of liquidity than a contraction?
Yeah, I think that's probably a fair observation. If we're looking at the typical on a linear scale, if we're looking at the typical moves in global liquidity, this is a much tighter range of movement in global liquidity. So maybe I'm looking at it on too small of a scale. In this particular range here between December and today, it does look like a little bit of a consolidation range. It's tough to tell though, because if we're looking at some of the bigger moves that occur in crypto relative to global liquidity, it doesn't have to be a very big move in order to see a big retrace in the crypto market. This small contraction in global liquidity right in this zone here, that even then you might have mistaken for a consolidation zone right here, still led to a fairly large retrace in crypto's price.
Fair enough. There's two things I've been paying attention to for this, and one is I've essentially been following this pattern um, that seems to be repeating from 2020. So we had this drop. There's the COVID drop, and then consolidation period. This fake breakout, steady rise, and then we got up to here. And after this 2020, there was a large breakout to the upside to essentially the 2021 high. And when I was taking a look at what happened in 2023 with the FTX collapse, and then the price dynamics since then, I was like, this is essentially, like, to me, this is identical
It's
to
very similar.
what's going
Yeah.
on. I was like, holy crap! And even the timings of when they're happening seem to be very similar as well.
Mhm.
And so that to me gave me this idea of, like, okay, now's the time to try to be bullish. But then also when I take a look at NFCI, so this is the Chicago Fed National Financial Conditions Index. It's not the best financial conditions index out there, but it is the one that's available to us. And essentially, when this is falling, things are better. Like, money becomes available globally. So these gray periods are recession, and when you get up to this black line, that's like the trouble line. That's where things are going to go off the rails.
Got it.
And I thought we were going to get there in 2022, but the recession of 2022, it didn't really pick up, and then we had this drop down. And so as long as this is falling, this is delayed by a week, or about a week and a half, so it could always pick up. But as long as that's falling and I'm not seeing any like negative events happening, then liquidity should increase. Also, if we take a look at PMI, the PMI, which is an indication of like the growth within the economy, the expectation of growth within the economy. We're sort of like bottoming. We bottom basically in 2023 and are rising from here, and so this suggests that the cycle will continue up, and that we already had our inflection point. So that's the way that I'm thinking about it. And so seeing a large, you're thinking about a 20% correction in Bitcoin as opposed to a 50% drop, right? Or a bear market for
Yeah, when I said
Bitcoin.
50, I meant the fib retracement. So
Right.
the overall price retracement there, in terms of drawdown from peak, would probably be somewhere around 30 to 35%.
So where would you expect Bitcoin to go then? Like, where would you buy back in for the sake of argument?
I would want to see some confirmation first, but some consolidation around the 50 to 52 zone, somewhere around there.
Okay, excellent. Well, if my trade goes south, one of the benefits of doing 50x leverage is that I could do it again. Perfectly fine.
Perfect.